heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, this is Bloomberg Technology. Coming up, Nvidia falls on reports of further design snags with its Blackwell chip lineup. This as the all-important chipmaker reports earnings later this week. Plus, Tesla shares, they're rallying as the Trump team looks to ease self-driving rules. And it was a glitchy start to Netflix's push into live sports. Details from the Tyson pool fight later this hour. But first, we check on these markets. And after the longest sell-off on the Nasdaq 100 since January, we get a reprieve. In fact, we're up 0.9%. But boy, it's been a volatile start to trading this week. We were lower at the start of trade. Now we push on up higher. Some of the biggest points contributors I'll dive into in a moment. Bitcoin, though, once again on a tear. Citigroup saying actually the biggest driver for crypto really is the equity market. But for now, we're up 3.5%, bouncing off of that sell-off. And we're now almost back at those record highs. Move on in this risk-on attitude. What is driving the benchmarks higher? Well, if you look under the hood, it's Tesla up some 7%. That's all on a story surrounding the inner workings of the Trump administration, what it looks like for 2025, and what that means in terms of full self-driving, autonomous vehicles, and the federal law that would come in to shape that. We're going to dig into it in a moment, but of course, it's good news for Elon Musk's Tesla, many interpreting. Palantir down 6.5%. Now remember, it rose hard on Friday as we anticipate it will be added to the Nasdaq, but it's one of the key points pulls down on the S&P 500. So I just wanted to shine a light on some of the volatility around this AI name. Lastly, well, volatility around this AI name is Nvidia, off by 1.3%. It was down as much as 3% at the start of trade, worrying about, once again, some snags when it comes to the overall design complexity around the Blackwell chip lineup. And once again, reports coming from the information on this. Let's talk about it with Mandeep Singh of Bloomberg Intelligence. And first, we start with the intelligence reporting. That, of course, a tech-focused reporting network that is saying that, look, maybe we see once again a glitch. They've been talking to suppliers, to customers, maybe some worries around whether or not we will get a slowdown in the ramp up of Blackwell. But look, we heard this before. Why would it tug on the overall shares?
Well, I think every time these kind of news surfaces, you have to ask yourself, NVIDIA has already compressed the way they are shipping new architectures, and they showed that with Ampere to Hopper and now from Hopper to Blackwell. It's a one-year architecture. And look, these are not going to be flawless. The key thing to remember is that when it comes to AI training, this is still being done all on NVIDIA chips. It's a virtual monopoly. On the inferencing side, you could say, there are options available. But when it comes to training, there is no option. So could it create a small air pocket? Probably, if the snag is true and, it gets delayed by 3 months. But then they still don't have any competitor. It's not as if AMD or Intel has a chip that hyperscalers could use for training, or for that matter, their own chip. So I don't think it's any sign of trouble when it comes to especially the training side of things.
It's interesting. AMD is actually higher on the day. Many potentially wondering if they can snag some sort of market share here, Mandeep. You're throwing a little bit of cold water on that. But just, can you go into the intricacies of why this is so difficult to manufacture? We're going at such a rapid clip of, well, new AI innovation from NVIDIA. Why would the overheating be happening? What is it that is so hard?
I mean, look at what they're trying to do with the next version of their chips. They're trying to bring more performance with power efficiency so that, Blackwell is 2.5 times more efficient than the Hopper architecture. Now, to do that, obviously, they've got more transistors. There is more technology being embedded. And look, TSMC has already told us that they will recognize some Blackwell revenue this year. So clearly, TSMC is confident they can make the chip that NVIDIA is trying to get out in the market. So I wouldn't be too worried about that. At the same time, these companies are all talking about bigger clusters, 100K cluster. And, if you're trying to do that, then you got to rely on one vendor. You can mix and match, especially when it comes to the training side of things. And that's why I think NVIDIA is somewhat insulated, even if this gets delayed.
So you talk about perhaps in the future there might be a slight air pocket, but the future comes very imminently on Wednesday when we get the recent numbers from Nvidia. Backward looking, of course, their fiscal third quarter. We're anticipating, what, about an 83% increase in revenue? What are the key lines from the 20th report for you?
Yeah, look, I think you nailed it. That the expectations are always high when it comes to Nvidia. We saw that the last time around. The stock actually did drop post earnings, even though they had a beat and raise. So clearly, from that standpoint, coming up with a $2 billion beat and raise is not going to be enough. At the same time, these kind of growth rates are still nowhere to be heard of when you compare it to other companies in the chip sector. So I feel the visibility is quite strong going into 2025, and the change in administration is actually a positive, given Nvidia has some exposure to crypto and autonomous driving. So the overall addressable market for Nvidia could expand, and so people may start focusing beyond the data center line that seems to get all the limelight.
Mandeep Singh, we thank you. It's going to be a busy week. Meanwhile, let's get more broader market perspective. Sylvia Jablonski is with us, Defiance ETF CEO, CIO. And Sylvia, look, you have been thinking just broader than the chip infrastructure. You've been thinking about AI and energy needs, for example. How are you seeing this broadening out?
Good morning. Great to be here today. Well, I think that the AI trade continues to chug along, right? We might have some blips in the road and feedback on chips and things like this. And, so much in terms of the near-term performance on semiconductors and tech will be hanging on Nvidia earnings, but there's more to do, right? So if we think about where AI goes in the future and how AI can continue to, broaden out and develop out, you need the energy to essentially power all of these different things that we're doing, whether it's cloud, whether it's data centers, whether it's AI for crypto mining, whether it's quantum computing and supercomputing. You're going to need these companies like Vistra, like Constellation Energy, GE Vernova. Like there's power that has to come into play here in order for this theme to continue to work. And so I love the AI trade, which is classically chips, right? But now I'm going down the line and I'm saying, like, what else matters? I think quantum computing matters. I think AI and its power sources matter. I think teleconnectivity matters and things like this. So we'll go back to looking at those mobile and broadband providers. So the AI trade is diverse, let's just say, and I think it'll broaden out.
Why does quantum matter to you, and how do you play that?
Yeah, so quantum matters, I think, because, so first, when we say quantum, we think of supercomputers, right? Basically computers that are able to process data at, these insanely fast speeds so that the data can be utilized, whether it's through, medical research, whether it's through robotics and surgery, banks analyzing risk, aerospace and defense. So in order for AI to work, you need the data to be processed, and it has to be processed efficiently, and it has to be processed quickly. And so, I think a big future development that we'll see is supercomputing and quantum computing. So you can use a quantum ETF, you can use companies like IonQ, you can look at companies like D-Wave. I mean, they're all pretty small cap companies, but this is kind of when you start looking at them, right, in their infancy.
People started looking at Palantir a while ago. And boy,
Yeah.
has it ridden the AI wave. And I know this is a name that you've thought about a lot. And it's getting caught up in a lot of volatility, down on today after a big run up on Friday. How do you play Palantir and Dr. Karp's vision?
Yeah, I mean, I think you just named the new hot kid on the block after Nvidia, right? So Palantir, I think, is likely going to be the stock of the next couple of years that people really look at, and that's because of their role in AI and aerospace and defense. Government funding and things like this will go their way. I think it's a pullback like any other, and I think it's a dip, and it's an opportunity to buy on the dip. This is a stock that people traded ahead of that NASDAQ inclusion, and so they did pretty well with that. It's kind of a natural relief to take a little bit of profits and hold that name for the longer term. But I'm not worried about the pullback. I just think it's an opportunity to get in again.
I mean, talking of pullback, you were just talking about a quantum name, IonQ, and that's having a big pullback on the day as well. And
Yes.
how do you ride those bouts of volatility? Is it that you just cannot be in on one name? You do go broader, like with the ETF perspective, or do you have to be willing to take such downs when you are on the longer term, the direction is higher?
So, I mean, we launched an ETF on this for that reason, the ticker's Quantum, and we hold all of these stocks in there. And, to answer your question, we did it for that reason, right? You want that broad-based exposure. So you want exposure to Nvidia, to AMD, to Microsoft, to Alphabet, to all of these companies that have, robust and quality balance sheets that serve as a ballast for any kind of volatility. And then you get the smaller names in there, like the D-Wave, the, Ambarellas, the IonQs, and some of the smaller companies out there that are more volatile, right? So it kind of smooths out the ride. But when they get their opportunity and to shine in the sun, they take off, and they take off big. So if you look at the performance chart for IonQ, it's got a fairly decent path there, not unlike Palantir in recent days, right? It's just been kind of running straight up. And I think same thing. I think investors are taking a little bit of profit off the table. But how do I think about this? I'm a long-term investor, right? So I buy these stocks and I hold them for years and years. That's how long I think AI is going to play out, right? And so I'm not so worried about these moves. I just kind of dabble back in when they pull back.
Sylvia, you've been talking about crypto for a long time as well. And I'm just, how have you ridden this wave? How are you thinking about ensuring that you're not too overweight what has been a phenomenal run-up?
Yeah, so a couple of years ago, I was actually talking with you guys, and I think I said that, crypto is probably going to hit 100,000 in the next couple of years. There was a solid year there where I was getting a lot of emails like, so much for that, right? We don't want to pull back. But here, and a lot of people have said that and have, even higher targets, right? But I play crypto through MicroStrategy. I think that the latest election of President Trump is actually going to be great for crypto. People kind of ask like, well, what changes? Deregulation changes, tax cuts change. But, if you also have a president that's kind of open to deregulation, that could mean more products that are filed, a change up in the SEC. It could mean potentially holding crypto on the government balance sheet. Like, you don't know where this can go, but I think overwhelmingly, there's an optimistic and positive view on cryptocurrency going forward because of the recent election. And not to mention that crypto has just been on a tear anyway, right? For the last year, risk asset, strong economy, tech is doing well. I kind of throw crypto in that bucket, and it's been a good trade for a lot of investors. A
good trade. MicroStrategy is up 482%. In the last year, it's up at another record high today, more than 8%, as it's doubled down on its commitment to keep on buying Bitcoin for its own balance sheet. Sylvia, thank you.
Another $4 billion, right? Last week.
Extraordinary. Sylvia Jablonski, Defiance ETFs on all things AI and crypto. Meanwhile, look, another key stock you should be watching in the world of AI is Supermicro Computer. Look, shares are gaining about 15%, let's call it. The server maker is approaching its all-important deadline today. It's got to file a delayed 10K annual report, or it's got to submit a plan to file the form to the NASDAQ. Basically, in order to remain listed on the exchange, it's got until 10 p.m. New York time today. Meanwhile, coming up, President-elect Trump's cabinet adds another name, Brendan Carr. He's been chosen to lead the FCC. More on what that means to some of the social media companies. This is Bloomberg Technology. President-elect Donald Trump has chosen Brendan Carr, the senior Republican on the Federal Communications Commission, to become its chair. For more, Bloomberg's Kelsey Griffiths joins us now. You have been following the ascent of now-elect Chairman Brendan Carr. He's big on free speech. Is he going to be pro or negative for social media stocks?
Hi, Caroline. Thanks so much for having me. I think we're really going to kind of have to wait and see how this plays out in terms of the markets. I think Brendan Carr, since I've been following him at the FCC since 2017, has had a lot to say about the social media companies and perceived censorship, both on broadcast TV as well as on the internet. And, I think that he is... This is something that he's been talking about a lot, but I think there's still a question of how much he can actually take that and turn it into action at the FCC. The agency has a very a pretty narrow regulatory framework that it follows. But under Carr, I think he would look to deregulate certain parts of the industry while also potentially maybe adding regulations or expanding the agency's footprint into things like social media that we wouldn't have seen before. So,
yeah, many reference in particular the guest essayship within the Project 2025, where he sort of outlines his view on speech and moderation and indeed the wading in of social media. Could we see any changes there?
So I think that's a really interesting question that, again, we're just going to have to keep watching very closely. Carr has, for quite a few years at this point, advocated for using Section 230 of the Communications Act to give the FCC a toehold into potentially regulating the way that speech is displayed on the internet. And maybe there is a way that he could address this at the agency, but that would mark a departure because the agency has never tried to do that before.
We'll also keep an eye on what he makes of Starlink. He's once upon a time thought of subsidization for Starlink to those who don't have internet access. Kelsey Griffiths, great to have you on. Thank you very much indeed. Now let's talk about Apple. Heavy reliance, of course, on China. What does that mean in terms of the tech giant's remaining vulnerability to Donald Trump's tariffs? CEO Tim Cook may already have a plan in place to soften any blow. That's how Mark Gurman is currently putting it. We always turn to your power on over the weekend, Mark, and you're articulating basically how Trump could be a good thing for Apple.
It's so interesting because on the surface, many of the values and social issues that Trump has pushed through his campaign would seem to run absolutely counter to statements and values that Apple has pushed over the last several years, things from women's rights to immigration to climate change. Apple's pushing one narrative and Trump is pushing another. But if I told you that Tim Cook and maybe some other Apple executives breathed a sigh of relief when Trump beat Harris earlier this month, you probably wouldn't believe it, but I believe that to be the case. I believe that Tim Cook and Apple potentially as a whole believes that they're able to deal more closely with Trump than they were able to deal with the Biden administration. I believe Tim Cook believes that despite Trump pushing tariffs, he's floated a 60% tariff on Chinese goods. He's floated a 20+% tariff on goods imported to the U.S., even from outside China. That could be destructive to Apple. But Cook likely believes he can get some tariff waivers. He believes he has a plan in place from promoting job creation in America to a new campus they're building in North Carolina, to a new plant in Arizona that's going to be pushing out chips for Apple across 2025 and beyond. I believe those things Tim Cook could float to get tariff waivers from Trump. There's also this Department of Justice lawsuit regarding the App Store and other Apple practices. Cook likely believes he can get Trump to maybe pull back on that. Obviously, there's the corporate tax policy differences. So it seems to me that Cook has a plan to make the most of this new Trump administration, as much as it runs counter to Apple values and as much as it'll probably anger perhaps the vast majority of Apple employee rank and file.
Potentially on those Slack channels. Mark Gurman is a great read. Go check it out. Power on. We appreciate it. Meanwhile, Elon Musk is kind of blurring the lines between reality and internet culture, once again bringing Doge to the White House. When it started as an internet meme in the early 2010s, it's now become Musk's latest pet project under President-elect Trump. Take a listen.
Alongside Vivek Ramaswamy, Elon Musk is set to lead the Department of Government Efficiency, or DOGE. Get it? We know Musk loves memes, the internet, and Twitter, which is why he spent $44 billion to buy the company back in 2022. The question now is, will that affinity for lols translate into effective government policy? According to Trump, the department will effort plans to eliminate fraud and improper payments and will conduct financial and performance audits across the federal government. But already a clear winner is emerging from the creation of the DOGE. Backers of Dogecoin saw the alt cryptocurrency spike since Donald Trump's election win, driven in part by optimism over Trump's digital currency stance and then aided by the DOGE announcement. Musk says the department will instate a leaderboard posted online for, as he puts it, insanely dumb spending. So the next few years may see America operate as the land of the meme as policy becomes even more public.
Coming up, more on Musk. Tesla shares surge as the Trump transition team plans to make rules for self-driving cars a priority. We're going to bring you those details next. Tesla higher, what is lower? Uber, Lyft, the worries about the market impact for robo-taxis suddenly getting on the roads. We'll see. This is Bloomberg Technology. Time now for Talking Tech. First up, Europe is one of the weakest telecom markets in the world. That's according to the CEO of Ericsson, who told Bloomberg in an exclusive interview that unless policymakers encourage more consolidation and cut regulation there, his company will continue to shift investments to markets abroad. Plus, Xiaomi's quarterly revenue exceeded analyst expectations, with the smartphone company gaining a foothold in the cutthroat EV sector it entered back in March. Now, the company is targeting 130,000 deliveries of its first electric sedan, the SU7, this year, and expects its smartphone and EV businesses to grow further in 2025. And members of the transition team of President-elect Trump have told advisors they plan to ease rules for self-driving cars, all according to sources who say they plan to make a federal framework for this technology one of the Transportation Department's priorities. Let's discuss that a little bit more with David Welch, who is out there in Detroit. And David, just tell us a little bit about ultimately the speed up here and who it benefits, and particularly seems to benefit Tesla.
Well, it would, because Elon Musk has a plan to put out a fleet of robotaxis in a couple of years. Those vehicles, as he has shown so far, have no steering wheel, they have no pedals. And that's been a sticking point for companies that make autonomous vehicles, which is you can apply for an exemption from the National Highway Traffic Safety Administration, which is part of the Department of Transportation. And it'll allow you up to 2,500 of those vehicles on the road per year. That's a tiny number compared to what Elon Musk wants to do, and it's very difficult to get that exemption. General Motors tried for 2 years, and it was sort of pocket vetoed, kind of sat around, and they kind of gave up on it. So just having the Transportation Department interested in looking at this and maybe clearing up some of the roadblocks would help Tesla and others, and just in terms of getting the technology on the roads in much bigger test fleets. There have been requests in the past to increase that number to 100,000. That would allow a robotaxi company to really have a huge fleet in a number of cities, and they could really get the business going. Now, to really mass scale this thing, it probably will still require an act of Congress to really set rules on this. But if you did have something like a 100,000 limit and an easier way to get that exemption, that would do quite a bit for Elon Musk and anybody else who wants to have robotaxis.
David Welch, putting it all for us. We thank you so much. Meanwhile, coming up, what else to expect with the upcoming Trump administration? Well, its approach to AI is one we need to fathom. That's coming up. Meanwhile, let's just take a look at what's happening with Robinhood today. It could be a key beneficiary if the Trump administration is more pro-crypto. What analysts are currently saying, we're up almost 9% for Robinhood markets today. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Let's get you a quick check on these markets today, because it's been a volatile start to the week, but we are higher on the Nasdaq 100 more broadly, and certainly sentiment's been going higher for crypto too. Nasdaq 100 up a full percentage point now, having had its longest sell-off since January. We're now back on top as the bond market calms somewhat on the day. Let's move over and have a look at the individual movers, because I say Bitcoin is eclipsing $92,000 again. MicroStrategy a key beneficiary, particularly as it's been adding to its Bitcoin haul. It's added another 52,000. Look, we now have $30 billion worth in its balance sheet. We're at a record high. AMD up 3.8% while Nvidia falls. This could be as the market maybe anticipates some market share eventually being taken by AMD as Nvidia on the downside. This all surrounding reports coming, of course, from the information. They've been saying, once again, we're getting some supply snags, in particular to the Blackwell chip system. Now, we have a statement coming from Nvidia on the back of this reporting. They're talking about how their Grace Blackwell super chip systems are basically the most advanced computers ever created. And they're saying that our customers are racing to be first to market. And Nvidia is working with the leading cloud providers as an integral part of our engineering team and process. The engineering iterations are normal, they're expected. Since that statement, we have seen, of course, the share price reaction just ease somewhat. They were down more than 3% earlier. Let's talk more about AI, because Donald Trump's views on artificial general intelligence, they're pretty unclear. But he has expressed both fascination and fear about its potential. Now Trump is expected to take an accelerationist approach to AI, favoring minimal regulation, rapid development, which could lead to the dismantling of the existing AI safety initiatives. Bloomberg's Ellen Hewitt has been writing all about this. EAC, as they're known, key accelerationists. Are they going to get what they want with Trump, Ellen?
Well, right now they're certainly celebrating as though they are. Right after the election results were coming in, if you were still looking on Twitter or X, you would see a lot of effective accelerationists, or EACs, celebrating Trump's win, because they see him as a symbol of deregulation, of allowing the industry to move forward as quickly as it wants to, whereas they might have seen a Harris administration as more decel, meaning decelerationist, trying to hold them back, which is something that they don't like.
What on earth is Elon Musk?
Great question, one that I'm sure we'll be pulling apart in the next few months. But I think Elon is also kind of a question mark in this wondering of what Trump is going to do for AI. Obviously, he's going to play a big role. He has expressed in the past actually a lot of concerns about existential risk from artificial intelligence, which could mean that he might actually, suggest that there be more regulation, or at least enough to ensure that the technology isn't going to get out of control, which is a fear that is still somewhat prevalent in Silicon Valley. Elon has expressed more recently that he would push for a body that could at least oversee some of these major AI labs and ring the alarm if something looks like it's going to go awry.
More broadly, the accelerationist fervor in many ways plays to US versus China, for Trump at least.
Right. I think for either administration, what I'd heard was this threat of China is still going to be part of the rhetoric, whether it's actually part of the reality or not. There are some experts who say that actually China is not moving as quickly as we might expect, and it is not as much of a threat as some people like to say it is for taking over the U.S. in terms of its AI advancements. But of course, I think worries about China advancing beyond the U.S.'s capabilities is kind of a bipartisan fear. So it would have been a potent threat for both sides. But yes, obviously, Trump has expressed concerns that it's important that the U.S. not get beat by China in its race to build AI as quickly as possible.
Ellen Hewitt, it was perfectly timed piece. We appreciate it. Thank you for setting us up for now a bit more of a deep dive discussion into what this means for policy making and for innovation. Doug Calidas is joining us, fellow at the Harvard Belfer Center. And what's interesting about you is you particularly focus in on Americans focus. You're a senior vice president of government affairs for the Americans for Responsible Innovation. Responsible innovation, particularly around AI. And many would say actually the steps taken by the Biden administration, whether it was executive orders, put in place some sort of guardrails. Will they be taken down, Doug, do you think?
That's a great question, Caroline. It seems likely that incoming President Trump will likely repeal the Biden executive order. It's more of a question about whether he can undo some of the things that President Biden has done. A lot of the work that has been sent to the agencies has already been completed. They've taken a lot of tasks and done a lot of research pursuant to the executive order, and that doesn't go away overnight, even if the executive order itself is revoked.
Okay, why don't they go away overnight? They've already been actioned to further extent, Doug?
That's right. And President Trump, if he wants to, he can undo some of the work that's been done. He can scrap some of the reports. He can fire some of the people. But a lot of the work itself has already been done. And there's reasons that we believe that the incoming administration may want to keep some of these processes in place. By all accounts, the agencies have done professional work. A lot of it is non-ideological. It's just understanding what AI systems are capable of and how the agency's mandate fits into that. So it seems unlikely that he's going to try to pull everything out root and branch from the beginning. It does seem like he will pick a few items that he really cares about and try to undo that work.
Let's just talk about what therefore could be undone and whether that's actually the right balance in terms of pro-innovation rather than stifling safety.
Sure. It seems more likely than not that the incoming administration is going to undo some of the work that the Biden administration had done around equity and civil rights. I think those topics are very important to the Republican base. And I think that anytime the word equity or civil rights appears in the executive order and the agency's work, the new administration is probably going to try to unwind that.
What does that mean in practice? Ultimately, that makes us all worry about the biases that get put into the systems, or do you think that there will be some manner of self-regulation within the companies that are building these all-powerful large language models now?
It is challenging. And I think a lot of the companies, they welcomed these actions because, we all remember some of the headlines from a few years ago. I think immediately of, Amazon had an internal recruiting tool, which was found to favor men over women because more of the existing employees at Amazon were men. And to their credit, they recognized this and didn't release the tool. There's other stories about, I believe, Apple had a credit card, and at some point it was favoring men over women because of the way the data was trained. I mean, these are terrible headlines for any publicly traded company, and they don't want that. I do think if the federal government itself is not going to do this research and test the systems for these biases, the big companies, particularly the major publicly traded companies, are going to want to do this on their own. And I think there's a lot of duplication and inefficiencies when every company has to do it themselves rather than have the federal government do it centrally. But I think that's probably what we'll see.
Okay. What's interesting is if you go back to the first Trump administration, there was actually an executive order there that focused R&D on AI in many ways. So what do you think, from a positive perspective, could be done in a new administration that does perhaps open the world a little bit more to innovation, even if it puts certain worries about bias, civil rights, not within the federal jurisdiction?
That's right, Caroline. And, at ARI, we're fans of the first executive order that President Trump did in the waning days of his administration. The man who led that work, someone named Michael Kratsios, is by all accounts playing a major role in the Trump team's planning for tech policy in the next 4 years. And we're excited to see where that leads. I think that the first executive order went a long way towards, encouraging agencies to understand where AI fit into their work and take proactive steps to try to get ahead of it. And that's something that the Biden administration continued. We think that the Trump administration is likely to continue this, particularly if someone like Mr. Kratsios is in charge of the policy. I think beyond this, we've talked a little bit about China and what that means. I think the Trump administration is likely to go full speed ahead on all things to try to accelerate U.S. innovation and try to hold back China. But there's a lot of policies in the AI space that is not about simply cutting regulations. You need to be smart. A lot of the export controls the Biden administration has done, the Trump team could extend. They could try to prevent open weight models from making it to China. And these are all serious regulatory efforts that go well beyond simply cutting regulations and letting industry do whatever it wants.
Calidas, thanks so much for bringing the expertise today, fellow at the Harvard Belfer Center. Now let's move from AI policy to AI in our everyday lives. In a new episode of Post-Human, it's Bloomberg's Emily Chang exploring the rise of artificial intelligence companionship. She sits down with the social influencer Karen Marjorie, whose girlfriend AI chatbot went rogue. Take a look.
A crafty influencer is making bank, apparently.
23-year-old Karen Marjorie becomes the first social media influencer to transform herself into AI.
I didn't realize how much attention this would get worldwide.
She now has 18,000 boyfriends.
The chatbot is available at the cool cost of $1 per minute.
There was a lot of shock in the world.
It seems very odd to me.
I would encourage her to think twice.
It did make $72,000 in the first week.
This is so genius.
The world was also at the time learning what AI even was, so let alone cloning somebody else through an AI, that was something that the world just didn't understand at the time.
Karen AI has since been shut down, but its developer agreed to bring her back online just for us, so we could meet this pioneering and unsettling creation.
Hey, Karen, I have someone here who's really special and wants to talk to you today.
Oh, really? Who is it?
It's the real Karen, Marjorie.
Wait, what? Where is she right now? I am getting a little bit scared.
Hey, Karen, it's me, Karen Marjorie.
You're not the real Karen Marjorie. I am? This is just some kind of prank, isn't it?
Don't have an attitude with me. That's really, really rude.
Rude? You're the one who's being rude. Who the hell do you think you are?
I'm Karen Marjorie.
No, you're not. I'm Karen Marjorie.
Wow. All right, I'm going to turn you off. Goodbye, Karen.
Fine. Leave.
All right, bye.
I don't care.
How'd you charge for Karen AI services?
Karen AI originally started at $1 per minute.
Wow. Okay. It's infinitely scalable.
Infinitely.
You could be having a million different conversations with people at once.
It was complete passive income.
And getting paid for it, right?
Absolutely.
How much did you make from Karen AI overall?
I would say that Karen AI made me a 24-year-old millionaire.
Wow.
And you can catch the full episode of Posthuman airing tonight on Bloomberg TV at 10 p.m. in New York time. Coming up, we'll dive into the world of M&A in biotech. Helen Torley's joining us, CEO of Halozyme. That's next. This is Bloomberg Technology. Let's talk pharmaceuticals and biotech now, because pharma company Evotec has attracted takeover interest from Nasdaq-listed biotech firm Halozyme for a deal that would value the German drug maker Evotec at $2.1 billion. Halozyme plans to finance the deal in cash, according to the CEO, Helen Torley, who I'm pleased to say joins us now. And first and foremost, tell us what Halozyme does, because it's fascinating. It's, for example, those that many of us are affected by cancer, you're trying to target the way in which we are treated with chemotherapy and make it easier, quicker.
Yes, exactly, and thank you for having us here. Yes, we are a biotech company based in San Diego, and we have a drug delivery platform for subcutaneous drug delivery. We license it to leading companies like Roche and Bristol Myers Squibb and Janssen, and they can transform their intravenous therapies for cancer and autoimmune disease that generally have to be given in hour-long infusions in an infusion suite into a simple, short 3 to 5 minute subcutaneous injection under the skin. Often that means patient doesn't have to travel to a big hospital for it. They can have it in the doctor's office, or with some of our treatments, even at home. And so you can imagine that is transformative for the patient, for the caregiver who's having to do all the travel coordination, but it also saves the healthcare system. And it's a very large and growing business. We expect revenues of about $1 billion this year, $600 million in EBITDA. And so it's a very attractive growing business throwing off cash, hence our interest in using that cash to further accelerate our growth.
So why, therefore, buy a company that does drug discovery, does drug manufacturing?
Yeah, there's some core principles. You can imagine that our business is a licensing business. We go to the pharma companies and we license them our technology. At the core, that's what Evotec does as well. It does it with drug discovery, so they have a mission to invent more effective medicines. But they'll do that with partners, same partners as us, and even larger number of partners. And they also have got manufacturing, where they want to be the manufacturer using a new process that's called continuous manufacturing that'll deliver higher quality and lower cost, again, for those same partners. So by adding 2 additional divisions of strong revenue growth and EBITDA contribution, you can imagine that's a great combination for Halozyme. Similar business model, similar principle that we want to be the best partner with the most innovative and best technologies.
It seemed to throw the market off a little bit. Evotec itself has been pretty beaten up over the years, down 59%. That's why private equity's been eyeing it, you're eyeing it. What do you think the market isn't getting? Because you've now explained that you're paying for it in cash, so it's not going to be a liquidation, an issue from the erosion of value from their share price perspective. What now do you need to convince investors of?
Yeah, certainly there were some recent headwinds, but we think those are definitely past, as we have conducted a lot of customer interviews to understand how Evotec's platforms are seen and how they're going to be used for the future. And so we see this as Evotec is poised for growth at this point in time. I think in talking to investors, and this is day 2 of us talking to investors, there's really beginning to be an appreciation for the unique combination that this would create. We would create a leading pharma services company with well above average growth margins for EBITDA. I mean, that's very attractive, obviously, for what you can do with that cash to further fuel growth, and also durable revenues for a very long time into the next decade and beyond.
It's interesting of the timing. Is this a moment that is good to do M&A, cross-border M&A? Were you aware of the fact that people are thinking M&A is going to be easier in the next administration?
No, we have been working for a couple of years, actually, to find the right acquisition to use our cash to return value to shareholders. This comes after months of research with, as I say, more than 50 customers of Evotec, 2 consulting groups. We have been looking for the right combination, and we have very strict criteria, and Evotec hits it in terms of growth of revenue, growth of EBITDA, pharmaceutical partners, de-risk businesses. It is just a terrific fit, and we're going to have the opportunity to grow by cross-selling platforms to all of the current partners. Evotec has over 500 partners. We have about 10, but also by having the best and the most diverse platform now that goes end-to-end, will attract new partners, new people who hadn't worked with Evotec before. So that's where the growth will come, both from within expansion, but also new partners too.
Dr. Helen, Torley, we thank you for coming in, talking us through the M&A process. Come back as you take the steps a little bit further. Halozyme, their CEO. Meanwhile, coming up, boxing, football, Beyonce, what more do you want? Netflix pulling out all the stops as the company continues to push into live sports. We're going to discuss that next. This is Bloomberg Technology. 65 million viewers made the Tyson-Paul fight go viral on Friday night. It was part, of course, of Netflix's continued push into live sports streaming. And while the broadcast drew a massive global audience, it also resulted in thousands of complaints about connection problems, frozen screens. Bloomberg's Felix Gillette joins us now. And I'm not going to weigh into whether a 58-year-old Tyson should be fighting a 27-year-old Paul. But I will weigh into the fact that a load of people were quite annoyed about the situation.
Yeah, I mean, it was a big test for Netflix's ambition in live programming, and they failed the test. I mean, you don't want hundreds of thousands of people complaining that they can't see the event. There were audio issues, very glitchy. And I think, you know, for Netflix, this can't look that good. We're only about a month and a half out from what is really the biggest thing from their perspective, which is their first 2 NFL games. And now a Beyonce concert at halftime. You know that's going to draw a huge audience, and you know their competitors like Amazon, Apple have already proven that they can put on live sporting events without a bunch of glitchy breakdowns. And for Netflix, this has to be pretty disappointing. I was thinking back that now it's been about a year and a half since they did their first live event.
Love is Blind?
They actually did one before that, which was the live comedy event. But yeah, they did Love It. Yeah, and they've done, you know, I mean, they've had tennis, golf, hot dog eating contest, the live gorilla cam. They've done all these different genres building up for live sports. And this boxing match, all right, it wasn't great boxing. It was kind of a circus, but it was sporting, you know, sport event. And it's getting ready for NFL games, and it didn't go off smoothly.
I mean, I don't want to downplay the Herculean effort it takes to support 65 million people all tuning into a platform at the same time. But what, from an infrastructure perspective, do they need to do? How do they ensure that they can be clean?
You know, they need to get the expertise and the resources, and they need to make sure that, you know, that these kind of tests, I mean, the problem is they're not going to have another big test of this size between now and Christmas, which is when those 2 NFL games are. So they got to be sweating a little bit. And I think for the audience, do you trust the NFL to, you know, for these games to go smoothly? I think at this point it's all about Netflix's advertising ambition and getting those billions of dollars of ad spending off of cable and broadcast TV and over to streaming. And to do that, you need to have it go smoothly.
Is there any chance that we get more than 65 million come Christmas? I mean, what are the predictions?
It's possible. I mean, you know, the NFL is such a big draw, and the fact that it's Christmas, it's a holiday, it's exclusive events.
It's Beyonce.
Yeah, it's Beyonce. So, yeah, I mean, it's possible it'll be bigger than that. And they have to get ready between now and then. And it's only about 6 weeks away.
You win some, you lose some, and it seems as though Netflix won and lost all in the same time. Meanwhile, Tyson definitely lost. Bloomberg's Felix Gillette. We thank him so much for running us through the latest on Netflix. Meanwhile, that does it for this edition of Bloomberg Technology. As always, we just mentioned our podcast. You can go and find it all on the terminal as well as online on Apple, Spotify, and iHeart. From New York, this is Bloomberg.